1/4 of your index fund is 5 companies. Kronos says all 5 fall next month. Let me show you what diversified actually means in 2026. These 5 companies, Nvidia, Apple, Microsoft, Amazon, and Alphabet, make up 26% of the S&P 500, 1/4 of the entire index. The top 10 is 36%. That means if you own a basic index fund, over 1/3 of your money is riding on 10 companies, and 1/4 is riding on 5. When people say the market fell, this is what actually fell. And right now, all 5 of these are pointing down. Here is what happened in July. The Nasdaq 100 fell 5.2%. The broader Nasdaq fell 2.6%. The S&P 500 finished basically flat, up 0.1%. And the Dow, the old economy index, actually gained 0.3. Same month, for different results. The tech-heavy indexes got hammered. The rest of the market barely moved. That is the split market. And the engine of that split is the AI chip trade unwinding. 1 week in July wiped $1.2 trillion off U.S. tech stocks. In a single day, Nvidia lost $250 billion of market value, its biggest one-day drop this year. And the spending that created the boom is the same spending that is scaring people now. Alphabet raised its capital forecast to $205 billion this year. Microsoft alone spent $41 billion on data centers in 1/4. The market is asking a very uncomfortable question. Who actually gets paid back? These are the 5 stocks inside a basic index fund, and they just had the strangest week of the year. Apple, at $308.91, fell 7.4% after earnings. Nvidia, at $200.75, rose 2.9%. Microsoft, at $464.72, rose 3%. Amazon, at $271.58, jumped 15.3% after its cloud beat. Alphabet, at $356.13, rose 6.7%. Same 5 companies, totally different days. But here is the part the daily tape does not show you. I ran all 5 through the Kronos AI model. Every single one points down over the next 30 days. Stock number 1. Apple. The most valuable company in the world, worth $4.9 trillion, and the heaviest weight in your index fund. Apple just reported revenue up 16%, and it overtook Nvidia as the biggest company after the chip sell-off. So the fundamentals are fine. But the Kronos model sees current price $308.91, falling to $282.64 in 30 days. A drop of 8.5%. The confidence range runs from 277.82 on the low end to 327.03 on the high end. Even the high end of that range is barely above today's price. Kronos is not calling a crash here. It is saying the easy upside is gone. This is Apple's Kronos chart. Blue is history. The green dashed line is the 30-day forecast. The shaded band is the confidence range. The prediction is a gentle decline, 8.5%, and the band is wide. That wide band is Kronos telling us it is not certain. But the direction is clear. For the biggest stock in your fund, a steady drift down matters, because it drags the whole index with it. Stock number 2. Nvidia. The company that built the AI boom, and the stock the whole market is watching. Nvidia trades at $200.75. It just lost 5% in one day when investors started questioning the circular financing behind AI chips. Nvidia sells chips, the cloud giants borrow money to buy them, and some of that money comes back to Nvidia. When that loop gets questioned, the stock drops. Kronos sees the stock today at $200.75, falling to $195.43 in 30 days. A drop of 2.6%. The range is $191.81 on the low end to $207.02 on the high end. 2.6% is the smallest call on this list. But after a year like Nvidia's, a flat forecast is the loudest signal of all. This is the Nvidia chart. Notice the forecast line. It barely moves. The AI model is essentially saying this stock is going nowhere over the next 30 days. That is remarkable for a company that went from a $3 trillion company to a $5 trillion company. When a hypergrowth stock stops growing in the forecast, it usually means the easy money has already been made. Kronos does not do hype. It does math. Stock number 3. Microsoft. The biggest spender in the AI race. and the one with the most to prove. Microsoft trades at $464.72. It just reported revenue of $90 billion, up 18%. Azure grew 43%. On the surface, a blowout quarter. But Microsoft spent $41 billion on data centers in that same quarter. Investors are starting to ask when all that spending turns into profit. Kronos sees current price $464.72, falling to $385.9 in 30 days. That is a 17% drop. The range is $380.34 on the low end to $466.86 on the high end. 17% is not a pullback. It is the market repricing a spending machine. Here is the Microsoft forecast, and it is one of the two most bearish charts in this video. A 17% predicted decline. The confidence band tops out at $466, barely above today's price. What Kronos is seeing is the same thing the bond market is seeing. Microsoft is spending faster than it is generating cash. When CapEx grows faster than free cash flow, the model reads it as risk. This is not a bet against Microsoft the company. It is a bet against the timing. Stock number 4, Amazon. The most extreme prediction on this list and the most volatile stock this week. Amazon jumped 15.3% on Friday after its cloud business, AWS, grew 37%. Investors loved it. But Kronos is the most bearish on this name of all 5. It sees current price $271.58, falling to $213.4 in 30 days, a 21.4% drop. The range is $211.61 on the low end to $278.82 on the high end. Now, 21% is a big call, and it deserves skepticism. But think about what the stock just did. It ran up 15% in one day on good news. Kronos is saying that pop was the top of the move. This is Amazon's forecast. 21.4% predicted downside in 30 days. That is the kind of number you usually see before an earnings miss, not after a beat. The low end of the band is $211.61, roughly a quarter below today's price. The model is essentially saying the 15% pop on Friday already priced in the good news, and there is nothing left for the next month. For a stock that moves this much, a wide band and a deep forecast line is Kronos saying strap in. Stock number 5, Alphabet, Google's parent company, and the one that just made the biggest CapEx bet of all. Alphabet trades at $356.13. It reported revenue of $96.4 billion, up 14%. Cloud hit $14.8 billion, up 30%. YouTube crossed $10 billion for the first time. But here's the problem. Alphabet raised its capital spending target to $205 billion this year and reported its first negative free cash flow. The market rewarded the growth but punished the spending. Kronos sees current price $356.13, falling to $323.59 in 30 days, a 9.1% drop. The range is $313.94 on the low end to $351.68 on the high end. Even the top of that range sits below today's price. Alphabet's forecast is the quiet version of Microsoft's problem, 9.1% down, with a confidence band that tops out just below today's price. The entire range is below the current price. That is Kronos being consistent. When a company promises to spend $205 billion this year and the cash flow turns negative, the model marks the stock down. Alphabet is still a great business. This chart is about valuation timing, not the company's future. Here is the full scorecard. Apple, predicted at $282.64, down 8.5%. NVIDIA, $195.43, down 2.6%. Microsoft, $385.90, down 17%. Amazon, $213.40, down 21.4%. Alphabet, $323.59, down 9.1%. 5 stocks, 5 red forecasts, 0 bullish. And these 5 names are 26% of the S&P 500. When your index fund loses value next month, this is the reason why. So what do you do with this? 100% of the 5 predictions are red, 0 are green. But first, understand what this is not. This is not a prediction that the economy crashes. It is a prediction that the 5 biggest stocks in the index lose value over the next 30 days. For an index fund investor, these moves are the market. You cannot diversify away from the largest positions in your own fund. The options are boring on purpose. Do not sell everything on a 30-day forecast. But if you are heavy in tech, consider trimming the names with the deepest forecast downside, like Amazon and Microsoft. Set stops on positions you cannot afford to draw down 20%. And if you are in cash, understand this. A 1-month red forecast is not a reason to buy. Wait for the market to confirm a bottom before you chase it. Every stock in this video is time-stamped in the description. If you want me to run your specific fund through Kronos next, drop the ticker in the comments. Subscribe for daily AI finance analysis. This video is for educational and entertainment purposes only. It is not financial advice. Past performance does not guarantee future results. Always do your own research and consult a qualified financial advisor before making investment decisions.